Hello, everybody. Going to go over our Forex trades today, Monday, October 26th. No scalp trades. We did have one swing trade, which we closed out in US dollar, Canadian dollar. Pulled out 44.9 pips, 45 on a size adjusted basis. We'll go over that in a minute. First economic data this morning, 10 o'clock came new home sales. They plunged 11.5%, and they missed estimates by, what is that, 50, 80, a little over 80,000 units. Absolutely horrible number. We've been saying that real estate is in trouble. Ever since hedge funds, they were the ones that really brought the real estate market back to, let's say 2005 levels after the plunge. I don't even know if they're at the 2005, maybe 2003 levels. Hedge funds are really the only ones that brought it back to that level. Without the hedge funds, real estate would be worse than it is than we've been seeing. Now, of course, there's going to be pockets that are hot, but those pockets are slowing down because the Chinese economy is cratering. And so when the Chinese economy is cratering, so is the European economy. And a lot of those hot pockets, New York City, Miami, LA, a lot of those hot pockets were fueled by the European money and the Asian money. Not that it's all drying up by any means, but a lot of it's drying up. Those people in Asia, as an example, that, you know, they were doing really well. They maybe had a few million put aside or whatever. They're seeing maybe they own a business. They're seeing their business slow. They're seeing their stock market holdings in Asia collapsing. You know, so they went from being worth a few $1 million where they were looking or did invest overseas, that their now net worth is worth much less. And they would prefer to hold on to those holdings outside of China, especially the Chinese. But you never know what's going to happen. And the hedge funds, not that they've stopped selling, but a lot of them, not all of them, but a lot of them, and the biggest one, Blackstone, which had put $8 billion into the real estate market, a lot of them have stopped buying. God forbid they start selling. I mean, wow, if that happens, look out. This real estate will get crushed. But today's data just backs it up, and you know we're hearing the people on CNBC and Bloomberg and Fox Business talking about how home sales have been relatively strong this year, and some of them will use the word hot this year, and that this is just a blip. This is just a one-time blip. Well, I got news for them, and I got news for everybody listening that it's not a one-time blip. We've seen this coming, and it's going to get worse. This is just the beginning. In our opinion, unless the Fed does something that we don't see coming, the economy is absolutely slow here in the States, on the verge of inflation in Europe. Actually, is probably some countries are in deflation. In Japan, China cratering. Our economy is stagnant to nothing, and we're even on the verge of deflation. So. And then another number that came out this morning was the Dallas Fed manufacturing number, which was supposed to come in at a negative 6.5, came in at a negative 12.7. So that's double the negative estimate. So a negative 6.5 to a negative 12.7, almost double the negative estimate, which is absolutely horrible. So terrible news. How did markets around the world respond? Really nothing. All eyes right now are on the Fed. The Fed meeting starts tomorrow with their announcement on Wednesday. We don't expect they'll do anything. We don't think they're going to do anything this year at all. Of course, there's some out there in the street saying, that they may do something this month, but there's a lot more saying that they may do something in December. The odds for a rate cut this week are, I don't know what they are. Fed funds, last thing I've seen, they're almost 0%. December Fed funds rate for a interest rate hike, floating somewhere around 30%, 34%, something like that. So That number is going to fluctuate, obviously, as more and more economic data comes in. If the economic data stays this week, I just don't see them raising rates at all this year. Let's get to our trade. Like I said, we had one trade, which was a swing trade, US dollar, Canadian dollar. We were long this for a couple of days from 1.31138. It didn't come close to stopping us out. You know, we were risking well over 100 pips. It's a swing trade. And you can see what it did. It pulled down a little bit and then just started to rip. This was Friday. And we were really hoping that it would maybe see some consolidation on Friday afternoon. And then when things either get a breakout late Friday or on when markets open Sunday evening, we could get a move higher. We did see the consolidation, but we did not see the breakout happen Friday or Sunday. So when things open Sunday, we just put we raised our stop, or whatever you want to call it, our profit target. We raised it instead of being break even. And why watch all this disappear? That if it takes out these lows here of the consolidation period, and that's exactly what it did do yesterday last night when after markets opened a few hours it took and it broke down a little bit. And you can see what it's done since. It is lower. We sold 1.31587 and it's currently 1.3131. So far we're doing better than we would if we were holding it right now. The other thing is we really don't want to hold this into the Fed meeting, right? So why take that risk? And we only had 10% of our normal size because it's a swing trade. So we're not going to really piece it out. It's not worth it. I guess we could maybe do 5%, something like that. But with swing trades, the size is so small, it's really not usually not worth it. But and the other thing it would be if we decide to piece out, we'd be piecing out most likely into the Fed meeting, and who knows what the US dollar does during that Fed announcement. So to us, it's just not worth the risk. Maybe this thing rallies and we could have made a lot more. Maybe it reverses and, it could stop us out at break even, or if we don't if we didn't sell any, and we didn't raise our original stop, we lose. So we'll take the 4.5 pips and we'll move on a size adjusted basis, 44.9 on a non-size adjusted basis. So not too bad. So that's it. Other than that, no scalps, just not getting any setups. The markets are relatively slow. Probably will remain slow until the Fed announcement, which should be Wednesday afternoon. It's a 2-day meeting this month. So we'll see what we get, and we're heading into the end of the month as well. So that's it. We're going to wrap it up. If you're still trading now, good luck. If you're waiting for signals, if any come out, this afternoon or this evening, they'll be coming your way. And like I said, if you're still trading now, good luck. And we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.